I already know that you are probably going to demand that I supply a really good reason to support the logic behind why I draw the resistance zones that I draw. If you understand trader humor, maybe put it in the comments here. But really, a better way to draw support resistance zones. So many people draw zones that are either like really, really wide and then it encapsulates way too much price data. And other people draw zones that are real tiny, little pipsqueak zones. You got a little tiny zone. You do not want to show that to your girlfriend or your wife, man. You do not want to see her with, she's looking at your tiny little skinny support resistance zones. It's like 1 pip wide. But then again, 300 pip wide support resistance zone doesn't work either. So in this video, I'm going to show you how I draw support resistance zones. I don't know what's going to work for you. I have no clue what will work for you because 90% of people fail at trading. It is so risky. Most people lose money. I somewhat have figured it out over the past decade. I've been trading for about 9 years. I'm just going to show you what I do. This past week, I made $22,000 trading Forex, just Forex alone. And I think it was only like 2 or 3 trades. And I share all my trades and my recaps and the analysis and all this stuff for free in my free Telegram channel right here. It's got 61,000 members right now. I just share the analysis, I share all the setups, I share all the recaps, I show the P&L, I show everything, and I share it all right here in the free Telegram channel. So if you're not in the free Telegram channel, just click the first link in the description below, and you can follow along with all of the trades that I share in there, all the analysis and all the little juicy stuff that we talk about. So let's get into the logic behind support resistance zones. Now, for the vast majority of most of my trading career, I have traded support resistance zones, predominantly on higher time frames. What does that mean? 1 hour chart, 4 hour chart, daily chart in general. Sometimes I do the unforgivable sin. I go to the 1 minute chart. I go to the 1 second chart. I drink 5 cups of coffee and my heart is racing and I'm shaking and my wife is coming into the room begging me to walk away from the computer because I won't stop yelling and I've already smashed my 2 computers and now I'm using hers and she's worried I'm going to smash her computer. I don't want this to happen to you guys, right? I've been through that myself. I don't want this to happen to you. So I'm going to show you the easier way, the better way to draw support resistance zones. Trading with support resistance is a very simple concept, and there's no predictive power using just support resistance zones, right? They're random boxes that you draw on the chart. The usefulness behind support resistance and technical analysis for that matter comes in the fact that it is a good way to control risk. It is a good way of you looking at the chart and saying, all right, man, if price gets there to this next zone, then I'm going to sell right there and I'm going to put my stop above and my target's going to go down here. I'm going to have a 1 to 69 risk to reward ratio, right? It just gives you a way of controlling risk. It gives you a way of saying, if you're using, say, like a dollar cost averaging or like a grid trading approach where you add to losing trades, you have this set of all the next zones you can add at. So you have a resistance zone here, you can sell at it with a small position size. If it bounces into profit, you close in profit, cool. And if it goes up to the next zone, well, you have another place where you can say, okay, this is how much drawdown I will be in if that happens, and this is where my next position can be. And then I'm, calculating, do some fancy math and some magic tricks to like add at the 3rd zone and the 4th zone, and if it bounces anywhere, you make a net profit or a break even. And the same thing if you're using stop losses, right? You can like enter a sell at the zone, and then do the really, really complicated thing of putting the stop loss above the zone. That's it. Then you put your take profit at least a 1-to-1 risk reward ratio. If you can just get it right a little more than half the time, say like a 60% win rate with a 1-to-1 risk reward ratio, then statistically long term you have an edge and you're likely to make profits, right? And some people, they can kind of pick out zones, right? They do a little like magic tricks and they're able to kind of pick out zones that are like even better. So they may have like a 65 or a 70 or 75% win rate. There's been points in my trading career where I've had like a 25% win rate over the course of a month or 2 or 3 months. And there's been points in my trading career where I've had like a 92% win rate. Like earlier last year, almost a year ago, I had like a 92% win rate for like 2 months. I made like 180 grand in like 6 weeks. It's absolutely crazy, right? So like it's going to ebb and flow and go back and forth. But in general, if you can just get it right a little more than half the time, give it enough trades, give it enough time, like a year or 2, then you have a profitable trading approach. And I'm not lying to you. That's actually true, right? You have a win rate that's above 50% with just a 1-to-1 risk reward ratio. Even after fees and commissions, they're not that much in Forex trading. You have a profitable approach. This is the beauty behind support resistance, but you have to know how to draw them right. So now I'm finally getting into it. You just have to have that context before we actually get into it. Otherwise, if you don't know the logic behind support resistance zones or why they're useful and everything like that and how to structure the risk for your trades, drawing support resistance zones is the least of your worries. You need to make sure that you're contextualizing it. So that's why I've given you the context. Let's go and get into it. Now, first what I'm going to do, I'm going to be like Leonardo da Vinci, Pablo Picasso. I'm just going to go here into no man's land and just draw some little rectangles on the chart. Now, I'm going to show you visually these concepts. So say this little yellow line is price. Then we'll go and we'll look at the actual pairs, and I'll even show you what I'm looking for this week. That way you can just see it practically in action. So price comes to this zone and then it bounces here, right? Now, you don't know that this is a zone at the time, right? You could just see price come to this random area down here, and then it happens to bounce. Okay, so you're like, cool, whatever. So then it comes down here, and then it bounces again, but maybe it goes a little bit lower than the previous low. Right, then it comes back, then it bounces again, like right in there, and then it breaks below this area, right? So now it starts coming back up. So what a lot of people might do, they might be like, okay, maybe, so some support resistance zones here, right? So maybe you've got like this area down here, and you've got this area up here. A big question that so many people obsess over, right? They ask me this all the time. They're just like, Nick, hold on just 1 second, brother. Hold on, man. We got to ask you something because we're trying to figure this out. I'm conducting my analysis on the chart for the foreign exchange market, and I'm trying to figure out, how big do you make the zone, because I'm a big man, so I got to have a big zone. Well, I'm not that big of a man. I think I look fairly decent, but but my zones aren't always small either. So here's the thing. You have to contextualize it, right? You have to look at price action and use your own brain. You have to give 2% of a shit and use a little bit of discernment of the price action to help you decide where to put the zones. So how do I generally draw the zones, right? I try to encapsulate as much price action as I can, but not too much, right? So it's essentially like, I'm not going to be having zones that are like 50, 60, 100 pips wide generally speaking, if I'm using the 1 hour, 4 hour daily charts. But I'm not going to have them like, 2 pips wide either, right? I'll give you an example. So there might be some people who are obsessing over saying, okay, let's figure out the exact zone, the exact place where price is going to bounce at, right? So they may draw it right here, and they may say, this was just the market makers stopping out the retail traders on the other side of the zone for the buy side liquidity, for the institutional order block liquidity, bank manipulation, order block accumulation, distribution, Wagyu beef, market maker, liquidity, liquidation, retail stop hunt, bullish Kobe steak entry candlestick strategy. And that's what they'll say this is. You know what this is right here? Price isn't perfect. Price just bounces around in these general regions, right? And there's never any quote unquote exact zone. There's never any zone you could draw that's right or wrong. You could draw zones all over the place in the chart, right? And a lot of it's just mental gymnastics, right? You just kind of have to experiment with this stuff. You have to get enough experience over the course of like 6 to 12 months until you can start putting zones on the chart that you personally believe are a little bit less shitty than the zones maybe you were drawing a couple months ago, right? What does this often come down to? It comes down to, in my experience, just using higher time frames. I like the 4 hour and the daily. Those tend to bounce pretty nicely. And then if it breaks below the zone, comes back and retests, those retests of those zones tend to bounce pretty nicely. And then also another big important part about that is that whenever you're drawing them on those time frames, you have to only draw the obvious ones. The ones that are so obvious that you send, you take a picture of your chart on your phone from TradingView, you send it to your mom, and your mom doesn't know, she sends it to your grandma, and your grandma, who's never even looked at a chart before, says, oh yeah, that's a good resistance zone, because it's so obvious that price has bounced there a million times. Where you don't want to get lost in, you don't want to get lost in this type of crap right here, where you're drawing like a zone right there, but you're like, but then the low could bounce there, and then we're going to take, this zone here, and there's going to be an order block here, and then like a liquidity sweep for the retail traders underneath the last point of supply, or whatever the hell all the kids are doing with this smart money shit that's going on these days. The reality here is that, price bounced in this general region, so I just draw a zone to kind of connect all of them, right? It'll generally extend all the way from the closure of the highest candlestick at the top of the zone. This is in the case of if it's a support level, meaning where price comes down to an area and then bounces upwards. That's a support, right? And a lot of you guys know, if it goes up to an area and then bounces down from that area, you call that a resistance, right? They work interchangeably. The same damn zone can be support and resistance because price oftentimes just bounces around back and forth between them. It'll bounce at them, it'll break them, and it'll bounce on the other side. It's all the same shit. So in the case of a support zone, I will generally take, let's say like the highest candle that closed was like up here. Let's say that we'll look at the charts here in a second and I'll actually show you. But the highest candle that closed bullish up here, the candle closure, let's say it was up there. And let's say the lowest wick was like down there, right? So then I would just extend the zone. In general, 90% of the time I draw the zone, I'll extend it from like the highest closure of the wick all the way to down here. Now, some people, they'll draw the zone like this, right? So, I mean, this right here, for example, this is going to be, it's going to make no sense. 186 pips. Like, this is kind of, I'm just drawing it on the random trading view chart. So that's actually not that relevant. However, when you're drawing a zone like this, like, you know, you then have to ask, where's the functionality? Where's the utility? Where's the practicality? What the F do I do? How do I actually use that zone to trade off of? If price comes into the zone, do you enter up here? And if you do, does your stop loss go in the zone? Well, that would be a stupid thing to do, because then it could just go deeper into the zone and still be valid, but then now you're stopped out, and then it goes back into profit, and then you feel sad inside, and you're crying in the corner, and your wife's boyfriend says that you're not even allowed to sleep on the couch. I don't want that to happen to you, so instead I'm going to show you how to do it a little bit better. Do you put your stop loss all the way down here? Do you have to drag your profit target all the way up here? Because then you got to be a hero, really. You got to like target all the way up here to really get the big portion of the move. You got to get those big boy trades, you know. You're just not cut out for that right now, because you could barely even open a brokerage account, let alone draw a support resistance zone. So it's my job here to yell at you in this video trying to help you to do this. So this probably isn't the best idea. So what does it really come down to? A lot of this comes down to just waiting for support resistance zones that you believe are very clear. Now, generally the clearest zones are just going to be the ones that are obvious. And here's a little pro tip. You're never going to know that a zone is obvious unless you can look at the chart and then within like 5 seconds just be like, oh yeah, that's easy. Yeah, that's clearly an area right there, right? The moment that you start taking like longer than a couple seconds, essentially, I just said 5 as like a random number. It was like 3 seconds, 5 seconds, 10 seconds. If it takes you more than a couple seconds and you got to really start zooming in on the chart, you know, you've got all these like schizophrenic predictions on a whiteboard behind you with all these like connections you've made about how the liquidity came here on August 11th and then on August 13th, 2 days later, the market makers swung price above here to stop out the retail traders and the banks are trying to manipulate my trade and I can't show my broker my stop loss. You don't have to do any of that, right? Look at the chart and ask yourself, where did it obviously bounce? Where are the big obvious bounces on the higher time frames, right? I use 1 hour, 4 hour daily, like I said. If you're new to this and just starting, maybe just pick like one time frame, or use the 4 hour, right? Perfect, a little in between. You don't even have to look at the daily or the 1 hour, right? I just kind of sift through them all because it just gives you a little bit more sort of like granular data. It gives you a little bit bigger of like, you know, you see more texture as far as the price action. But if you're just doing this to start, just go to the 4 hour, right? Look for the areas where price had big obvious bounces. One time is okay. It's better if there's been like, you know, 2 or 3 times because it kind of gives you more data to work with. But something where it's so painfully obvious that you literally start feeling pain in your body, because that's how painfully obvious the support resistance zone is. I want you to be looking at charts every day in constant pain because of how painfully good all the setups are. I want you to just have your watch list where you start salivating when you open up your phone and you're looking at your phone TradingView app along with your computer with TradingView screens up. You're literally putting TradingView on your TV screen. You're putting it on your TV screen and your wife is coming home trying to watch her Netflix series on Dexter, because that's what my wife has been really into lately. And she can't do that because now you've got TradingView charts all over it. This is my hope for you, right? I want you to have so many charts and so many beautiful setups on TradingView that you don't know what to do with yourself, right? You're going to make so much money that you're going to have to start donating. Man, I really sometimes get out there. Anyway, the whole purpose is I'm just saying, make sure that the bounces are very clear. That's the whole focus of this, okay? So whenever we're looking for like a clear bounce, this would be perfect right here, right? It's come to this general area a couple times and bounced away a couple times, and it doesn't have to be perfect. If price stops a little bit up inside the zone, or if it goes a little bit lower into the zone, or it stops midway through the zone, it doesn't matter. This is something like that. Same thing right here, right? Price came up into this area and then a couple times it bounced. It doesn't have to go all the way deep into the zone. And then sometimes it can even go a little bit past the zone, right? And that's perfectly fine. Just because it goes a little bit past it doesn't mean it's invalidated. The only time that a support resistance zone is, you know, obviously no longer bouncing is if price comes into the zone and then it goes clearly past the zone, right? And I'm not talking like barely like that. Like you can, because sometimes it'll happen, then it will come down really quickly and close on like a wick or something. That's not what I'm talking about. I'm talking about if it goes like clearly past the zone where you're like, all right, it has left the little shaded area and closed above it, and then the next candle started continuing away. That's where you go, you know, that's where you're either going to get stopped out or you'll be looking for your next entry. If you're using the DCA risk structure or you're using like hedging or like a pseudo martingale approach with grid trading where you're just adding subsequent entries and loss at the next zones, then you know, like, okay, that zone was invalidated. The next zone is here, and I will enter my next trade right there. And of course, you can just put your stop loss on the other side of the zone if you're doing that. So now where the hell would stop losses go, right? So what we're going to do, I'm going to delete all this. We're going to go back. We are going to go back. We're just going to. Okay, so let's do a resistance zone instead this time, right? So we've got a zone up here. I'm going to purposefully make this like not perfect just to show you guys like it doesn't have to be like super perfect, right? It just has to be reasonably clear, but not like crazy perfect. So in this case, right, we've got this crap right here. So we can see in general prices bouncing in this general region, right? Now you don't want to do the thing like where you're like, okay, dude, it's right here, man. That's the resistance. And it came back, but it sort of bounced as support, but it went a little bit below. But then this time it bounced perfectly fine as support. And then we go to the schizophrenic drawings with all the whiteboards, and you have to get 2 whiteboards because you become so schizophrenic and so paranoid of all the support resistance zones that you just start going crazy. But so you start doing this, you start trying to like make it super, super pinpoint and fine tune. And you're like, this is the bank level. This is where the banks are trading. And then you've got like one up here, and you're like, look, this is the liquidity institutional level, and that's the stop punt that stopped out the retail traders. You don't have to do any of that, right? What are you doing here? You're looking at the chart. You're saying price bounced in this general region, right? So now let's say the wick of the biggest closure towards the bottom of the zone is like, let's say it's like right here, right? So I'm gonna just keep that there, and then let's say that is like the highest point of the end and the tip of the wick, not the closure, but the tip of the wick. Then I'm just going to drag it to right there, right? And again, this doesn't have to be perfect. I don't want you to go to the chart thinking like, okay, Nick Sean has now taught me the holy grail of how to do the support resistance zones. I always have to draw it to the closure of the candle that's uppermost in the zone, and then the wick of the candle that goes the farthest in the zone every time. And this is biblical canon. I have to worship this. I'm not saying that. I'm just saying that in general, this allows you to encapsulate the most price data without the zone starting to look like shit like this, where you're like, well, I mean, it's either going to go up or down, but there's no way to trade that, right? Where does your entry go? Where does your stop go? Where's your target? Like you can't trade like that. Now, however, if you're trading off a zone like this right here, right, and you enter somewhere in the zone, we're going to talk about the entries in a second. Now you have a really clear area where you can put your stop outside the zone and you can put your target somewhere below, right? In most cases, I just set my initial target at a 1-to-1. I had one trade last week where I got more than a 1-to-1. It was like a 1-to-1.5 almost or something like that. And then one trade where it was like a 1-to-1, but then it hit the target, but like the spread didn't fill. Forex.com, their spreads are just, oh my God. And then so it started coming back, and I just ended up closing it near the target. So it was like 90% of what the target was. But all I'm saying here is you can just set your target at a 1-to-1 if you're just learning. Okay, I'm not saying it's better than anything or worse, because you still have to have an edge, whether you use a 1-to-2 risk reward ratio or a negative like 2 units of risk for only 1 unit of gain. You're using like negative risk reward, or you're just doing the 1-to-1 risk reward ratio coin flip, like 50% win rate trading strategy until you get enough experience. Then maybe it's 60% win rate. Whatever you're doing, I'm just saying 1-to-1 risk reward ratio, in my opinion, not financial advice, my friend. I just think that's a great place to start. Do whatever the hell you want to do. So with this being said, now where do our entries go? Okay, so this is a point of contention that a lot of people have really raised for me. I think that after you construct your zone and you get the zone, it's not too skinny and it's not too wide, and it encapsulates enough price data, but you've got it still as concise as you can get it to encapsulate all the price data. What I believe is that you should at least try to get an entry that's at least halfway into the zone. And if you can get an entry towards the extremes of the zone, even better, right? It doesn't always happen that way. And then if you're always waiting for the best, most perfect, most extreme entry, what that generally means is you're going to miss a lot of trading opportunities, which, I mean, I guess that's fine if you're only getting like, if you want one trading opportunity a month, or maybe like 1 or 2 trading opportunities a month, sure, like wait for the really good entries. But then even those are going to fail sometimes, right? Because if it goes all the way to the best entry, to the top crazy point of the zone where it's like you're going to wait for that high right there. So you're waiting for it to come up here, and then you got your entry and everything, and you're salivating. You are rock hard ready. As far as your confidence is rock hard and ready to go. It's just, you're just standing so strong and so tall, waiting for that entry, and then it never comes, right? It does not come. You do not come get your entry because it just doesn't come, and then you don't come, and nobody comes, and the entry doesn't come. You probably don't want that to happen. I don't want that to happen to you either, my friends. That's what I'm trying to teach you here. You don't always have to be the asshole waiting for the perfect entry, right? You're rarely going to get a perfect entry. Most of the time, price goes halfway into the zones and then kind of bounces, right? Okay, so that's it. So where do I generally enter? I just watch price action. It's a combination of experience and intuition and deciphering the price action and discerning what's going on with all the different experience that I have. It's a combination of all that. When you're just getting started, you enter wherever the hell that you want to enter. You put the stop loss wherever the hell you want to place the stop loss, and set the TP wherever you want. So let's talk about stop losses, right? So if you're using this as like if you're using a DCA risk structure and you have like the next zone, right? Then you just figure out what's the distance to the next zone, how much drawdown would I be in if I enter here at like one standard lot or something. And then when it goes there, was that going to be, $5,000 of drawdown? What's it going to be? And then am I going to add there? And if so, what lot size, right? Then you can pre-plan it out. If you're not using DCA as a risk structure, you're just using stops. You're just like, brother, if I get it wrong, I get it wrong. I take the loss. If that's what you're doing, then you set your stop on the other side of the zone. I know it's so complicated, right? You just put your stop on the other side of the zone. But wait, there's more. Nick, where exactly do I put the stop loss? Because sometimes price will go a little bit above the zone, like you said, because you said that, Nick, but it's still okay, and then it comes back, so I don't want to put it too close, Nick. I really don't want to put it too close. I don't want to get too close, Nick, but I don't want to have a super big, wide, fat, thick, voluptuous stop loss either. Why, my friend? Well, two reasons. Number one, the trade duration just takes way longer. If you have a stop loss that's like 1,000 pips away, and your target is 1,000 pips away, that shit's probably going to range for quite some time before getting to one of those areas in general, most of the time, generally speaking. So that the trade duration is going to take you like weeks, perhaps even months. That's very sad. You feel very sad inside, right? The other reason is because whenever you're using stops that wide, it's just not necessary, right? It's like you're going to be leaving a lot of money on the table in terms of missed opportunity because you're going to be sitting in trades that are just taking forever that you didn't really need to put the stop loss that far, right? It's kind of like saying like, you don't need to trade with $10 million, but if you can, then that's cool, right? You got 10 million, sweet. You've done pretty well in life and now you're trading with 10 million and maybe you'll make a little bit more money than somebody trading with like $100, right? You only need to trade with like a little bit of money. And of course, the amount of profit or loss you'll make is contingent upon your trading experience and how risk averse you are, how much you're risking and your risk tolerance and things like that. But as far as like stops, you don't have to put it like, way up here, like way past the zone. Like, you see, Nick, if the market makers fake me out, I can hold the trade and I'll be fine. Like, you don't have to do that, right? But then again, I wouldn't put the stop like barely outside the zone. Like some people will do it where they're putting the stop just barely past like the previous high. The shitty part about that is that, you're just going to take more pointless stop outs because say price comes up here to the zone, you enter right there, and then it just pops up here to the previous high. And then it stops right there and then reverses. Well, if you're using a broker like me, like forex.com, which has like low margin or what's it called, leverage, and then also like spreads that are in general slightly bigger, and then God forbid it's session changeover for Asian session, the spreads are like bam and they go out. You're going to get your stop loss hit all the time because you've got your stop loss too tight, right? A lot of people say, they say like, you got to have the big stop loss. You got to be a big boy, right? You got to have that huge stop loss. All the girls are looking at your stop loss. They're like, wow, bro, you have such a huge stop loss. It's so huge, folks, and it's so true, and it's so incredible. It's the biggest stop loss. It's the greatest stop loss. Believe me, folks, it's so incredible. You don't want that. And you also don't want to have a tight stop loss because if it's too tight, you can't get your entry in there. You cannot get in there. I want you to get in there in a very healthy, risk-averse way, calculating and accounting for whatever your risk tolerance is. So how do I do it? If it looks like it's too far and it looks like it's a million miles away from the zone, it's probably unnecessary, right? And if it's too close to the zone to where you're feeling like, man, like price could just barely, it could barely just tap above the zone, and then if it comes right back down, that would be frustrating because I get stopped out and then it comes back. I like to put my stops a good distance away from the zone. In this example, it would be something like this, and I'm going to show you more examples here in a second with the actual price data. That's where I like to put my stop losses. And then for targets, the target's easy. After you figure out the damn stop loss, just drag the target to like a 1-to-1 risk reward ratio. I don't want to hear it. You want to use 1-to-2, 1-to-3, 1-to-69, 1-to-420, 1-to-9,000 risk reward ratio. If that's just you, that's just your vibe, you just really like doing that kind of stuff, then you go for it. I'm just saying, if I would start with 1-to-1 because it's just more realistic. Like, you're going to have stops hit regularly. You're going to have targets hit regularly. It's going to give you enough experience to start being able to select better zones. Now, that's how so that's how to draw support resistance zones, and that's how to enter them. Now, I'm just going to show you one more thing, which is like what not to do. Which is like, let's say there's a, I'm just drawing random ups and downs, random scribbles. I'm not even trying to, it may seem like I'm trying to do something, but I've just drawn random ups and downs, right? So I'm going to ask you to rate this zone on the bottom. And I'm also going to ask you to rate this zone right here in the middle. And I want to ask you, which zone do you think is better? Okay. So you're really pay attention here, right? We're going to go back. We're going to look. We're going to do it one more time. The first one is this zone here on the bottom, right? And the second zone is this zone right here in the middle. Which one do you think is better and why? You're such an idiot. I know you've got it wrong. Neither of those zones are good. That's the end of the video. Thank you. We're going to tune in next time. I'm just playing. There is a zone that I think personally is better, and I think it is the one on the bottom. If you chose the one in the middle, you're a complete idiot. You're going to fail at I'm just kidding. No, if you chose the one in the middle, you just got some more learning to do, and that's perfectly fine. So here's why I think the zone on the bottom is better. I think it's better just because there are more big price moves off the zone. Price has hit the zone. It's had nice big bounces off of it. You're going to find this all the time in price action, especially if you go to the 4-hour chart and you're just looking for the clear, obvious zones. It just, every time price gets there, you know, it's had a nice clear zone. And you'll also see, as far as this recent data, it hasn't really broken this zone a lot. It broke the zone like back in here from this little silly, like, oh my God. Okay, let me just reorient it. Okay, so it did break this zone right here from this little silly squiggly line that I drew. It broke up above the zone. But aside from that, it had pretty clear, pretty obvious bounces every single time. That's a big portion of it. That's why I stressed in the beginning when I was saying it. I was like, you want it to be very obvious. You don't want to draw zones where you're having to get a protractor out and like an electron microscope and having to see and having to study like market theory and fundamentals and liquidity to see the amount of volume and orders that are coming in to determine where the big banks and institutions are placing their entries. You don't have to do any of that. None of that. You do not have to do any of that. You just have to look at the damn chart and ask yourself, where is it bounced pretty consistently most of the time, right? That's why I think this zone on the bottom is better. Now let's contrast that to this little zone right here, which is a really naughty zone. Santa is not going to bring presents for this zone. It's going to get a big, fat, huge lump of coal this year, this zone. It's such a silly zone. Such a tremendous zone, folks. Just the worst zone, probably the worst trade deal in the history of trade deals. It's just zone will make you lose billions and billions and billions, folks. Believe me, so incredible. You don't want to use this zone. Please don't use zones like this. I'm going to show you why right here. When you see that price has slashed through a zone multiple times in a row, right? You see this like went up above here, came back below, but then, oh, look, bro, it bounced right there. See? Twice, clear resistance zone. That's super clear, right? You would think so. Then it breaks above, and then, dude, look, it came back and it bounced as support. So that's a good zone, man. So then it goes up above, but then it breaks back below, and then it bounces as resistance. You're like, look, see, it's resistance now. But then it, breaks above and bounces as support, but then it comes back and breaks below, and now it's bounced above, and it looks like it didn't even bounce right here, and I just drew it randomly going through the zone. Whenever you have to deal with zones like these, the problem with them is that they're just not as reliable, right? Think of it this way. You, which are probably a real retail trader, unless you're for some reason working at Barclays Bank and you're an institutional trader, for some reason watching my videos, random bald white guy from Texas with a beard yelling at you in a YouTube video, you, my friend, if you are a retail trader, represent about 5% of the total volume and liquidity traded in the Forex market. 95% of all the orders placed, all the volume traded in the Forex market comes from funds, banks, institutions, things like that. And I'm not making this up. You can go look this up. It's a multi-trillion-dollar per day industry, Forex. 95% of that liquidity inside the Forex market is given to the market from banks, institutions, trading firms, things like that. You and your little 5% of the liquidity, we're over here trading, from our little, it's just not that much, like, to be concerned about, right? It's not that much to be given a lot of merit or credence to. And so whenever we're looking at big major zones in the chart, we're looking at the areas where most people are likely to either do one of two things. Number one, take profits or place orders. So think about this. If you are, let's say you sell up here because you think this is a good resistance zone, for whatever reason, let's just like right here, right? So you sell up here, you're like, yep, it's clear enough. I enter halfway through the zone, just like Nick said. Nick said halfway through the zone is fine. I put my stop, not too close right above the zone, but not way far either. Just put it a good distance above. So that way, in case it, spikes a little bit deeper into the zone and comes back, I still won't lose the trade. And then you have just, let's say for a 1-to-1 take profit, right? You have to ask yourself where are most people going to be taking profits at if they've held the trade, right? It's generally going to be at these major areas of support resistance. You can draw zones like this. Like look at this one right here, right? That's, technically, right? You could draw this, it bounces resistance there, and this was just a fake out by the market makers, and then it bounced again right there. So should we enter here, right? There's probably not going to be that many people in general, relative to other zones, taking profit at these little tiny zones where you have to play a lot of mental gymnastics and roll a lot of dice with yourself to try to figure out whether or not you should use them. The best trades and also the best places to take profit are going to be at the clear areas where there's been nice big bounces. Stuff like that where it's just so obvious and so reliable where you're like, oh, dude, yeah, I'm not setting my profit target past there, right? You may, if you're entering a trade, you might even not target down into the zone, just you target just before the zone, right? Or something like that, just so that way you can get out of it. This is my dad. My dad is calling me, and I'm purposefully ignoring the phone call. That way I can teach you guys this very important market maker information for the institutions on how to draw support resistance zones so you can trade like the banks, my friend. Totally satire. But with this being said, you want to draw the zones that are clear. You want to avoid zones and shit like this. You don't want to be drawing zones like that where it's just slashing through it over and over. You don't want to draw zones like this. Instead, you just want to draw the clear, obvious support resistance zones. Now, this being said, keep in mind, trading is subjective. There could be a zone that you personally think is really clear that I look at and I'm like, that is dog shit. That is so bad. That is so terrible. That is the worst support resistance zone I've ever seen in my life. You're guaranteed to fail at trading. I hope that you fail at trading for the rest of your life, right? That's just my opinion though, right? I could have a zone where I'm like, yeah, guys, it's a zone. It's a good zone. It's going to bounce here. And then you think that is the stupidest zone that I've ever seen. Why would Nick Sean of all people is using he's buying at that support? That looks like an idiotic zone to buy. I am not buying. And then it comes to the zone and then I buy and I'm all excited and I'm bragging about it. And then it starts going into profit. And then I'm just bragging like, yeah, I made 5K so far and it's going to go all the way to the 10K profit target. I'm going to make 10 grand on this trade. And then boom, it turns around, runs back into my entry, breaks below the zone, stops out and I lose 10 grand. And then you're thinking like, yeah, Nick Sean's an idiot. I am better than Nick Sean himself. I've transcended my moral flesh and I have become a living God. And I am better than thou great handsome Nick Sean Esquire, which maybe you actually might be a better trader than me. But all jokes aside here, it is very important to just trade the very obvious zones. That is why I use just the obvious zones in general when I trade. But keep in mind, the whole point of this was just to say that this is a subjective thing. Me thinking a zone is better or you thinking a zone is better, it's all subjective and arbitrary. Just get experience doing this over and over again, then you'll start being able to kind of notice like what zones tend to work better, what types of setups, what types of price action looks good for bounces and what doesn't. So now let's go over here and look at the actual chart. These are some trades that I'm actually looking to take next week. So one of the zones that I was looking to trade was a sell at this resistance right here. I did not actually take this trade. I was not able to see it because it happened too fast during like an overnight session whenever I was asleep. So I was not able to take that trade right there. However, I was looking at this zone and I'm waiting to actually take this coming week. I might take it and I might not, but prices come down into this zone. Now, why did I draw the zone this far? I extended the zone this far just because I think this is still viable to trade, even though like it's come really deep into the zone. It's actually broken past the two previous lows just very gently here, right? We'll know this is invalidated if it comes like all the way down into here. It's like, okay, come on, bro. Like it's broken way past the lows. Like that's it. Now, some people I see, they'll draw zones like this, right? They'll be like, that's where the zone's at. That's where the banks are trading. But look how many times it spikes past it, right? So you have to account for these wicks down here on the bottom. So I extend down to here. And then you also have to account for these wicks at the top, right? Because the price did spike all the way up into there and then it pulled back. So you have to account for that by dragging it up. What I would not do is do some shit like this where you're like, okay, that's the zone, bro. Support resistance. We're going to trade the bounces, bro. Like, it's really hard to trade that way, right? And whenever you're looking for bounces of resistance, wait just generally for it to come all the way to like kind of like near the highs where it was. That'll generally be at least halfway through the zone. In this case here, if you're looking for sells, for example, let's say it breaks below, I get stopped out next week, then it comes up here, and then I would be looking to sell up here around these highs as well. and I'll be looking for a bounce away from the zone. You do not want to do some shit where it's like it goes below, then it comes right there and starts bouncing, and then it didn't even come and test all the way into the zone. Then it starts bouncing away right there, and now you end up entering down here, and now you got to have your damn stop all the way like up here above the zone. Then your target is just down here in like hell, and you have to target, a huge target to get there. You know what looks so much easier, right? Let's play it out. If you just were patient, if you were not such an impatient bastard, if you were just patient, here's how this would look, right? This is what your life would look like. Aside from the fact that your wife wouldn't be bringing her boyfriend over every night and forcing you to sleep on the floor in the spare bedroom that she uses as a home office that you're no longer allowed to use to trade with. Aside from that fact right there, if you enter just at the zone, the same stop loss, right? The same stop loss, the same risk to reward ratio, and you can risk the same dollar amount, right? Because you would just adjust the position size based on however much you want to risk. I'm risking about 10K per trade, sometimes 5K per trade. You might be risking $10 per trade, or $50 per trade, or $100 per trade, or euros or pounds or NZD or AUD or JPY, whatever it is your home country currency is, right? Or CAD. I think we even got a few of you guys from Canada following me. So with this here, the same parameters, right? All you have to do is just wait and not be a degenerate idiot. You just have to wait. And if you do that, that goes to the same stop loss, you're out. It was a quicker trade. You didn't have to sit through all this drawdown. And then if it turns around from your entry and goes right to profit, it only has to go this far, right? 100 pips instead of 200 pips. And now your profit targets hit, I don't want to say twice as fast because it'll depending on the context. It'll kind of vary. But all I'm saying is it's going to be a much quicker trade. You'll either get stopped quicker or it'll go into profit and hit your target quicker. I was in a trade last week that took like less than a day. Here's the trade I took. I will show you. GBP CAD. Price came up here to this resistance zone and I sold. I called a trade right there at that resistance zone and I sold about halfway into the zone. And in fact, I will just show you the actual trade the moment I called it out. Here it was. This is, February 3rd, 2025 at 8:40 a.m. Central Standard Time. I'm short on GBP CAD, $10,000 risk, all parameters shown in the chart terminal above. This is it right here. $10,000 of risk. My entry was 7.5 because that represented it. You'll also see where I put my stop. You see how I didn't put it like way up into no man's land, like 5,000 pips above? And you'll see also how I didn't put it right above that high, right? Because price could come up to that high and still test it and bounce away and even go a little bit past it and still turn around. I put my stop all the way at an area where I know that accounting for spread, I'm not going to get stopped if this is going to bounce anywhere here in this general region of this zone. And so what happened, I had the target down here, and then this one hit profit. What did I do? Oh, this is the one I closed early because look at this shit right here. It came down the same day, like went almost to the profit target. This is the daily candle closure. This was right after the market changeover, the new candle opened, and it went down to the TP, but because spreads were too wide, it didn't fill the TP. So as it started trickling back, I just opted to close it there. That was my swap fee for holding it over the changeover, and the profit was 8,600. This was over the course of a couple hours, right? This is 7 p.m. So this was almost 9 a.m. to around 7 p.m. This is like a 10-hour long trade. 10 hours, $8,600. And then there was another trade that I took on a GBP USD that I held for a couple days. How long was this? Right? This is a daily chart. You can see my entries and everything. Again, if you're not in my free Telegram channel, I post all this in there as well. I post the recaps and stuff like that. 1, 2, 3, 4, 5, 6 days. So 5 days from last week, and then the 6th day, the market opened and gaps down here at the beginning of last week, and it hit the profit target. And this was a $14,000 profit. If you look at my entry, you'll notice I didn't enter when price was outside the zone. I didn't enter after it already started moving. I didn't enter preliminarily, right? If that's even like a good way to say it. I didn't jump in too quickly. I literally waited for it to get into the zone. This was a super clear zone where price had bounced to support twice, came up, hit it as resistance, left 2 wicks right here, came right back down. I waited for it to get into the zone, and then I entered a sell. My stop loss was above and my target was below, and I let the trade play out. This is what the parameters looked like. You can see where my stop loss was. This one was actually a pretty good distance above the zone. Probably didn't even need to be that high. Honestly, I could have probably had it like a little bit closer, just a little bit closer, maybe like 1/3 of the way closer, and it still would have been fine. And then I would have made more profit on this too. But anyway, this one still was like a nice trade. I mean, I'm not going to complain about 14 grand, and then you compare that with this one right here was like a $22,000 trading week. And so this one, and it actually ended up going even further than that, right? What am I looking for next on GBP CAD? I've got my alert right here that I'm going to set right now. and I'm going to be looking to trade this zone. Now you watch how I draw this zone, right? As you see all my little magic tricks. So I'm going to show you all my magic tricks right here. Super cool. That's like the stupidest magic trick. So I'm going to show you all this right here. I would draw the zone like this. I just kind of do a rough draft first, then I kind of adjust it. Start like that. Yeah, okay. This is going to be it for me. Just encapsulate to like the closure of that candle. Cool. So now if price comes down into here, let's kind of plan it out, right? If price comes down into there and I enter like in this general region, sometimes with spread, you might get filled a little bit higher. Sometimes you get lucky and price goes a little bit deeper like Euro AUD is doing right now and you get a better entry. But if I enter somewhere around the middle of the zone, my stop can go just on the outside of it. My target just has to go to a 1-to-1 to make the trade viable to take. And honestly, that's probably giving it way more room than it needs. Probably like something like that might be even a little bit better. That's still 183 pips, right? It's either going to bounce or it's not. So what we've done is I've drawn a zone where I'm waiting. I'm not going to try to enter way up here, and try to take the bounce way up here. But I'm not shooting for the moon either where I'm like, nah, bro, it has to come all the way down here, all the way to that extreme low. That's the only condition I'll take it because then it could go there and then, still bounce. But then again, it could bounce further up here like it did twice and you would never even get your entry if you were waiting for this. It can also go and dip just below the zone if it needs to, and then it can pop back up and still has the opportunity to go up. This is only going to stop out because the stop loss is placed at an area where if price breaks the zone and continues significantly past the zone, then it will trigger the stop loss, right? And that's perfectly fine. Again, you only have to get it right a little more than half the time to be profitable. If you take 10 trades, even with a 60% win rate, you win 6, you lose 4 of them, and then you've only come out on top like 2 units of profit. This is just with a 60% win rate, right? I've seen people who have been my clients who have like told me that they have like 70 or 80% win rates, and some of them use risk rewards that are like bigger than 1-to-1 risk reward ratios. They're like better traders than me, right? I'm barely right a little more than half the time long term, and I make a little bit more money than I lose. But there's some people that I've seen that are even better than that, right? They have 70, 75, 80% win rates sometimes, and pretty consistently, right? For like most of the year, and they'll still average a couple losing months per year or a couple break-even months per year, and that's fine. But people get a lot of crazy results, right? And I'm not guaranteeing anything. I'm just saying like that's what they've told me. That's what I've seen. I've seen some crazy shit and being an educator here for the past like 6-7 years that I've been teaching. And I've been trading for like 9 years. So yeah, I've been teaching 7 years and I've been like trading for like 9 years since like 2016, back when I was 21. I'm 29 now, about to be 30. Absolutely crazy. So this is what I'm waiting for on GBP CAD. I'm waiting for price to come into the support zone, and I'll probably buy if the context is correct. You'll notice I didn't enter any trades here at this zone. I don't even know why I have that zone here on my chart. Maybe it's just because price had paused here before. It paused there as support, but then it broke through. Then it slashed right above his resistance. Then it sort of half-assed bounced as support here, but then broke below, then broke back above, and then bounced as support, and then went up here. You also have the same bullshit here with this area where it's like, it was a break and retest here, and that worked, but then it came up and bounced again and then broke above, but then came right back below. Those zones are a pain in the ass, right? If you just wait for the stuff that's more clear, stuff like this, right? How many people you think holding sells all the way from up here are going to be taking profit right there at the area where it has literally bounced for the past 3 times? 700 pips there, 700 pips there, 600 pips there. How many people you think are going to be taking profits right at that zone? Probably a lot, right? Probably there's going to be a lot of volume traded at that zone because it's so clear. How many people you think are going to be entering like buys right here? I don't know. People enter trades for different reasons. Everyone sees the market different. People are entering based off indicators and, it's overstretched to the 25 RSI level with a Fibonacci retracement of 78.6. You have people entering for a million different reasons, right? All I'm saying is like the areas that stick out on the chart like a sore thumb are areas where there's a lot of volume traded. And you can play the whole conspiracy theory route and you can say, but no, bro, the banks will manipulate it and then they'll throw out your stop loss and this and that. You know how you literally prevent yourself from getting, quote, manipulated by the banks and the institutions and market makers, bro? You know how you prevent that? Move your stop loss a little farther. This is why I like trading with 1-to-1 risk reward ratio. You don't have to be the hero and get the perfect entry and it's triumphant and you're coming into Rome holding your sword out as a gladiator. You're like, I conquered the banks and the market makers and I've made what is they use Cicertii in Rome that was at the currency. They're like, I made a million sestertii and I've conquered the lands. Like, no, it's stupid and it's idiotic. And most of the time you're probably going to lose if you do that long term. I don't think it's a great way to do it. I think it's great to just maybe drag your stop loss a little bit further. And then whatever the hell you want to call this, little liquidity spike past the zone, price just leaking through the zone. Some people call it like leakage. Whatever you want to call it, you can avoid that a good chunk of the time if you just distance your stop loss a little bit, right? Your stop loss doesn't have to be just right 1 pip on the other end of the zone. Just, space it out a little bit. Give yourself a little bit of room. All right. So we went over Euro AUD. This looks so here. Let me just remove everything and redo it from scratch, right? Price has bounced here 3 times as resistance, and then now it's bounced twice as support, and now it's come really deep into the support level. Do I think it's actually broken this zone? I wouldn't say this is broken just yet because it's not far enough, right? In my opinion, it's not far enough. I'm giving this zone a little bit more room, giving it kind of a general region to bounce because price is not perfect, and then just because price goes a little bit past, like in this case, how much past? It's gone 30 pips past on the daily chart, right? On the daily chart, it's only gone 30 pips past the previous lows. I don't consider that to be anything crazy enough that's going to cause me to be like, no, bro, it's a horrible zone. Can't do it, bro. It's nothing. It's barely anything. I will show you an example of this. Here's an example. Let's go back in time. Here's the trade that I lost. So this is the zone that I was trading off of because I like this zone a lot. I was like, it bounced once and then it twice and then broke below, found resistance there one time, second time, broke back above, and then it came back to test. So I was like, all right, sweet. We're probably going to bounce from here up to here in this next zone. So what did I do? I had the bright idea to buy. So I bought, and my buy started going into profit, and I was feeling pretty good about myself. But then what happened is price went down here, and then I thought, okay, price might be breaking the zone now. So instead of me just, giving it a little bit more room, what I did is I was like, I'm going to close my buy in a small loss. So I took a small loss in the first buy. And then what I did is I entered a sell. And then as soon as I entered the sell, within a day, it spiked up and it would have gone to my original target for where the buys were. This shit right here, where it leaks to the zone a little bit, it happens all the time. You go and you draw any support resistance zone you think is clear, and a very great percentage of the time, you're going to see that price has those moments where she's just acting a fool, right? It's her time of the month. She does this. You have to deal with her for a couple of days when it's her time of the month. You have to be a good man. You have to take the high road, and you have to set the moral character and the good moral example to be the one that's patient with price, because she is just like your wife. Oh man, I'm such a bad influence. Trading is just like your wife. It's a pain in the ass all the time, and it's barely profitable. I'm just playing. I love my wife. Pretty much all the time. Let's get back to the video, guys. Anyway, looking at price action. So here's what I'm looking for AUD CAD right now. Right now, AUD CAD ended up going down a little bit lower. I was looking for this right here, for price to bounce right here. But I ended up starting to disregard this zone because I was like, it's not looking as clear to me. It's looking kind of weird. What looked better to me was this right here. Looked so painfully sexy. My whole body started breaking out into horrible gut-wrenching pain. I started having muscle spasms. It was so bad. That's how painfully good the zone was. When I drew this zone, I was in so much pain and I was so happy about it. So price went into this zone. I thought, okay, if price comes all the way up into here, then I'll sell. And that didn't happen so far, right? Price just bounced away from this zone. On Friday, it closed like this. It would be halfway to my profit target had I entered at the zone. You're not going to get all the zones right. You're not going to get all the entries right. You're going to take entries that end up stopping out, and you're going to miss entries or elect to not take certain entries that end up, they would have worked out. And you're like, damn it, I missed that trade. It's a part of trading. You're not going to always get it right every single time. All I'm saying is just use the zones that are the most clear to you. And then if you set your stops and targets in a logical way, then it makes it a lot more fun to trade. Why does it make it more fun to trade? For 2 reasons. And I'm not guaranteeing any of this. I'm just saying my personal reasons why I think it's more fun to trade this way. First reason is it's simple. You don't have to play all these stupid games and get involved in so much of this magic tricks and mental gymnastics that so many people, they're walking on the tightrope of mental gymnastics trying to figure out how to justify, this is a zone, bro. This is the zone the banks are trading. It's going to bounce there. It has to bounce, bro. It has to bounce here. It has to 100% has to bounce here. Stupid. You don't have to play any of those games. You can just say, this looks like an area where it's very obviously bounced a couple times. Maybe it'll bounce again. I'm going to draw it here. I'm not going to smother the trade. I'm going to wait for a good entry in the zone, at least halfway through the zone. I'm going to distance my stop a good amount below it, and then I'll set my target at a 1-to-1 for now. You just do that over and over on a demo account for 6 to 12 months, right? You're going to get plenty of experience. The first reason is because it's so simple. Second reason is because I think people are more likely to be profitable if they keep it really simple. If you just keep things simple and control risk, I think you're just a little bit more likely to be profitable than the 90% of idiots who lose money trading. Maybe I shouldn't call everyone idiots because I lost money trading for like 2 years. So that would mean I was an idiot for like 2 years. But hey, even I'm an idiot and I still figured it out. I don't consider myself to be super smart, but I am smart enough to figure out, like, if price comes to this area, maybe it'll bounce. And as long as I have a controlled risk, I'll make a little bit more money than I lose long term. And that's good enough for me. It's given me a very nice, cushy life. So let's go ahead and we're going to go down the list a little bit more. I actually don't have any other setups on any of the pairs. You can see this is the GBP USD trade that I took right here. I sold there. It hit the target, came back up into the zone. Looks like it ended up bouncing the last 2-3 days of last week. I did not take another sell right there. And as far as everything else, I don't see anything else right now on these other pairs. I'm looking at CAD JPY, but CAD JPY I think could come all the way down here and bounce. So I haven't really worked with it yet. It could bounce here, but then now it's like close into the zone and slash through and has a weird indecision candle. I don't really see any setups in any other pairs right now. I've clicked through these all, so I'm gonna save you the time. I don't see anything. GBP NZD perhaps if she can come a little bit higher, but this is gonna probably take weeks to get there. All the other pairs, USD CAD, if she breaks this zone, perhaps. I'm gonna be maybe watching this a little bit going into next week. This is probably gonna take like 2-3 weeks to set up though, maybe at least a week, if not more. GA, Euro GBP, NZD USD, GBP JPY, Euro JPY. This looks pretty decent. I could see this actually working. I didn't know she got there last week. This is let me set my alert. I'm gonna set my alert all the way down here. In fact, let's so see, this could be like a pretty wide zone, but it could bounce anywhere in here, right? Anywhere it could bounce in there, and if it breaks below, which it will at some point, probably. Most of the time zones will break at some point, then it'll be a loss. But as long as it bounces a couple times before then, usually you get plenty of good trades. So I'll be watching that going into next week, and then NZD CAD. So you know what? I lied, guys. I was like, no, there's not a lot of good trades, but actually that's actually pretty juicy. Make sure you're in the free Telegram channel. Click the link in the description, or I'll probably put it in the pinned comment too. For those of you lazy bastards who don't want to click the link in the description, I'll put it in the pinned comment. Make sure you're in my free Telegram channel so you can follow all this stuff. And that's all I got for you today. So I hope you enjoyed this video. If you did, the key number, if you want to leave a comment, is 921. That's the number. In your comment, include the number 921 anywhere in your comment. And then if you ask a question or say something, I'll respond to you within like the first 24, 48 hours in most cases. If I missed your comment, I'm sorry, but most people I get back to. But that lets me know that you got to the end of this video if you leave the number 921 in your comment. Just type the numbers 921 somewhere in there creatively. And then if I see that, I'm going to scroll through comments. I'm going to see that you left that. That shows me like, oh, you're actually not being a lazy asshole and you're actually getting to the end of the video before leaving a comment, which I really respect because most people, as you know, it's not really good retention. People watch the video for 15, 20 seconds and they just click off. They go watch cat videos. They go watch videos about Ruth Goldberg machines or Rube Goldberg machines. They go and watch videos, I don't know, Mr. Beast videos or something more entertaining than some bald guy with a beard yelling at you about how to draw support resistance zones. But fortunately, you made it here to the end of the video, and I try to make it super entertaining as much as I can in most cases. But, some days I'm just not in that kind of mood where I'm like sharp and poppy and witty. But today, fortunately, I was. So I really hope you enjoyed this video. As you can see, there's no cuts or nothing. I do this all in one go. I don't script my videos. I don't read from a script trying to keep the engagement high or retention. I just act myself. I just make these videos like this. So if you enjoy that, the like button is right there if you want to hit it. I'm not saying you have to. You do whatever the hell you want. You're an adult, but the like button is right there. And the comments section is below as well if you really enjoyed this video. So thanks for watching. I appreciate it, my friend. I'll see you in the next one. See ya.